This definition is so simple in fact that one word can be used to describe each term. Supply equals selling. Demand equals buying. Of course, it isn't quite that simple, but that's the general idea. An area of increased supply refers to an area of increased selling pressure. This selling pressure causes a market's price to fall. The most effective way to go about translating the concepts of supply and demand into actionable areas on your chart is to change the way you think about the two terms. At the end of the day, an increase in demand is just another way of calling attention to an area of support. In the same way, an area of supply can be thought of as an area of resistance. We call these support and resistance levels. These are the levels that form on your chart from which you want to look for buying and selling opportunities. By understanding the supply and demand concept, it will be very simple to spot supply and demand zones on charts. Although this would be a hindsight observation, it will give us a good hint of where to look for our trades in the future. It is key to understand that the theory of supply and demand Forex trading is based on analyzing and defining zones in the past. These zones determine where should we expect the price to reach in the future. First, we look for a balanced zone. This is a ranging consolidation zone of price. It represents buyers and sellers who are at peace. For every demand to buy, there is a seller. Next, we look for a breakout of that range. If it breaks out upward, it represents an increasing demand and a lack of sufficient supply. If it breaks out downward, that represents an increasing supply and buyers reducing their demand. The supply and demand concept is timeless. It will always be the simplest, most atomic way of explaining why price changes. See you in the next video.